Alright, Assalamualaikum warahmatullahi wabarakatuh. Okay, regarding tutorial on government grant. Alright, so I made one video on this one to discuss specific on government grant that focus on deferred income method. Deferred income method. So another video will discuss on writing off against asset method. Alright, so I'm going to upload two video for the purpose of this tutorial part government grant. Alright. So the first question we are going to discuss for this is the last past year question, which is a July 2023. You can check your July 2023 question. All right. So, Barang, this question, we proceed a bit on the question. On 1st of January 2020, Gambir Barad is awarded with a grant amounting to 6 million from the Malacca state government. So, the company is required to construct a factory that will produce a green technology for water treatment in 3 years period. Okay, the grant is for what? To construct a factory. Factory is what? Factory is PPE or asset. So in other words, this is grant related to asset. So grant related to asset have two methods, which is writing off against asset method and deferred income method. So writing off against asset method and deferred income method. Alright. So next, that will produce a green technology for the period of 3 years. Okay, now 3 years. Okay. Gembira Berhad use an income approach in recording the grant received based on MFRS120 government grant. Okay, income approach. Okay. Just to be clear with you guys, they have income approach and they have a capital approach, right? Right. So we are not cover capital approach, we just cover income approach only, right? So by right in income approach, there is grant related to asset and there is grant related to income. Okay, grant related to asset and grant related to income. So grant related to asset, deferred income method, and writing off against asset method, right? However, in year 2022, right, the Malacca state government, all right, right. So this one is income method, right? So we go for deferred income method, right? Use income approach, right? So we go for deferred income method, right? However, in year 2022, the Malacca state government discovered that Gembira Berhad has failed to develop this technology and required by them. So instruct Gembira Berhad to repay back the amount in full. In full mean that's how many? 6 million. They received in January 2020. Okay. So now you see the date here in year 2022. You see they receive here 2020. 2020 they receive after 2 years. 2022 they unable to perform, so they need to return back. Okay. So this answer, I'm going to show you first how to solve a detail of this working, like what I always do in class, right? All right. So in 2020, when the year they receive a grant received, right, in 2020, right? So we are going to follow income approach, which is in this case, we are going to follow the deferred income method. Sir, why we follow deferred income method? Why not we follow the write off against asset method? In this question, we cannot follow write off against asset method because we don't have the value of the asset. We don't have the cost of that factory, right? The question did not give us. So the question did not give us. So we cannot proceed with writing off against asset method lah, because writing off against asset method, we need to have the cost of the asset. So that we can minus with the grant, right? So now we don't have cost of the asset. We don't have cost of the asset. Therefore, we cannot proceed lah with this write off against asset method. So we only left one method, which is a deferred income method. All right. Okay. So how to do this, right? So basically, 6 million we receive as grant, right? So therefore, we record on 1st January 2020, debit cash or bank. How do we receive, right? Credit deferred income, the government grant. GG is government grant, 6 million, 6 million. Okay? All right. Then, what happened? Then, right. So next, at the end of the period, that's all, right? That's all. Because we don't have the value of asset that we purchase or asset that we construct. Okay. Next, at the end of this year, okay, at the end of this period, you need to what? Amortization the deferred income. So how to amortize the deferred income? It is for 3 years. The question gives us information on 3 years period, right? So we do this. So RM 6 million divided by 3 years. So 1 year is 2 million. So debit deferred income, credit amortized of deferred income. Remember, amortized of deferred income is income that you recognize in your statement of profit or loss as income. Deferred income is a liability. You put on debit side because it is decreased in amount, right? Okay, that one is 2020. In 2021, what happened? The question did not mention anything, so we assume nothing happened. Therefore, we can just proceed to the end of the year, 31st of December. Again, we do another amortization. We can do amortization for how many years? For 3 years only, because they mentioned here 3 years period, so 3 years only. So this is the second time we do this. 6 million divided by 3 years, we get 2 million. Again, debit deferred income, credit amortization of deferred income. Again, amortization of deferred income is an income recognized in statement of profit or loss. All right, yes. By right, we know in year 2022, there is a revocation. Mean that we need to return back this grant. The company did not fulfill the condition to get the grant, right? Okay. Before we proceed any further, right? In this one, we need to know the balance of our deferred income. Okay. Deferred income, the original amount is 6 million. Then we minus 2 million. Then we minus another 2 million. So the remaining balance of our deferred income is how much? Okay, so this is the statement of financial position as at 31st December 2021 at the end. So we minus 2 million, we minus another 2 million. So the balance of our deferred income is actually 2 million. Okay, the balance of our deferred income is actually 2 million. So how in 2022 we want to do the revoke or revocation of this grant, the blue color, the one I put in blue color. You see, we need to pay back in full amount. How much is the full amount? 6 million we need to pay in full. All right. So in terms of revoke or revocation of this government grant, how should we do? We have to return back 6 million, right? So therefore, we record like this, All right. So we can either pay by cash or bank, or we haven't paid yet. We call as payable. We haven't paid yet. We call as payable. But we need to pay, right? But we haven't paid yet. Right? Maybe the company don't have money. We don't know, right? The question did not mention. So it's either cash, bank, or payable. Grant payable. Okay. We need to pay how much? 6 million. Because the full amount is 6 million. But we still have a balance of deferred income, right? So deferred income is liability, right? So we put on debit side, deferred income 2 million. So by right, this is 4 million is the balancing figure. Okay, again, 4 million is the balancing figure, which is the loss that we transfer to statement of profit or loss 4 million. By right, this 4 million is actually because we recognize income 2 million, right? So that's why we need to recognize loss by 4 million. Actually, the company did not lose anything lah because the company have to pay back 6 million, get 6 million, pay 6 million, no cost, right? So by right, no actual extra cost, right? Just cost to cover the income before to make sure it is neutralized. Okay, again. So this is the full working for this topic under deferred income. It's not for this question, right? For this question, it's not really full, but for this question, this is the working. All right. So therefore, we proceed to the question. What the question actually asks in this question? All right. Which of the following statement relate to the grant received by Gambir Barad in year 2020? Grant received by Gambir Barad in year 2020. So this is a grant for company to produce factory. Factory is PPE or asset. So this is actually grant related to asset. Grant related to asset, not related to income. Income, again, what is example grant related to income? Grant related to income that we receive for us to clean something, for the expenses, not for the asset. Grant related to income, we receive something because we are going to spend in expenses, not purchase an asset. Grant related to asset must relate to some asset. Okay, related to income is we spend something. All right. Grant received by Gambira shall be recorded as revenue in the company. No, we record as deferred income first. All right. Grant received by Gambira shall be repaid back with half amount to the government. No. They did not state that we need to pay half. Right. until the year 2020, until the year 2022, right? We just know that we need to pay because we are unable to fulfill the condition, right? So next question. Determine which of the accounting treatment is true. True, correct, betul, Grant received by Gambir Barad, which will be recorded as deferred income in their financial statement 2020 and 2021. True or false? Remember working just now? True, right? True. I put the smiley face line because it's correct, right? Okay. Gambir Barad need to repay back grant received from a Malacca state government due to incompliance with the condition attached. Correct, right? True, right? Yes, true. Right. Grant received will be directly credited to shareholder interest or reserve. Remember, this one is capital, right? We did not cover the capital, so this is incorrect. No, because we just cover under income, not capital, right? Right. So 1 and 2 is correct. Therefore, the answer is B. Okay. All right. So we proceed to the question number 3. Choose the right journal entry for Gembira in the year 2020. Okay, we do this working already, right? In year 2020, this is the journal entry that we have, right? So we can check from the question. So from the option that we have. So debit bank 6 million, correct. Okay, debit bank 6 million, correct. Credit deferred income 6 million, okay, correct also. Debit deferred income 6 million, this one wrong. Credit SOPL 6 million. Okay, this one wrong. Right. Debit bank 6 million. Correct. Credit deferred income 6 million. Correct. Debit deferred income 2 million. 2 million. Correct, right? Deferred income, right? Okay. Credit statement of profit or loss. Again, statement of amortization of deferred income is actually statement of profit or loss. 2 million. Correct also. So the answer is actually B lah. So debit bank 6 million. Bank 6 million. Correct. SOPL 2 million. This one is not complete lah. Not complete. Even though both is correct, but it's not complete. Not balanced, right? Debit credit need to be balanced, right? And debit statement of profit or loss 6 million. Wrong lah. This one wrong. Okay. And credit deferred income 6 million. So wrong. Okay. So the answer is B for Paul. All right. So next, which of the following statement is not applicable to Gambira Berhad in year 2022? What happened in year 2022? There is a revoke. Revoke, how do we do? Debit deferred income 2 million, debit loss 4 million, and credit cash bank or payable 6 million. Right. So we see the option that we have. The repayment of grant shall be set off against unamortized deferred income. Not applicable, not applicable. So this one is correct. Correct lah kan? So because we debit the deferred income first, right? So correct lah. So Gembira Berhad shall debit deferred income 2 million. Debit deferred income 2 million. Correct lah. Yeah, correct. So not applicable. The total amount of loss was 2 million. Loss is not 2 million, loss 4 million, right? So this one is wrong. The grant shall be accounted in accordance with MFRS108, changes in accounting estimate. Correct. Because there is a revocation. Revocation, we need to change the estimate. Correct. So the D also correct. So the answer is not applicable. The answer is C. All right. This is one question. Next question, February 2023. Okay, this is the next question. Same, this question is also under deferred income method related to asset deferred income method. All right. So on 1st of January 2020, Centric Barad received a government grant by 500,000 to acquire an equipment. You see the word equipment. So the fair value of the equipment is 2 million. Okay, because there is an equipment, so we know it is grant related to asset. And if it is grant related to asset, we know deferred income or write-off against asset method. Okay. So the fair value of the equipment is 2 million. Useful life is 10 years. So depreciation is 10 years and amortization is also 10 years. Okay. The company adopt a deferred income method. So deferred income method is the first method. So we are not going to use a write-off against asset in this question. Okay. Related to straight line method of depreciation. Okay. However, in year 1st January 2022, Centric Barad no longer comply with the condition attached to the grant and repayable in full. How much full they need to pay? Full they need to pay is 500,000 because the grant they receive are 500,000. So the asset are 2 million. The grant is 500,000. Okay. Right. So again, guys, I'm going to show the full working on how to solve this, or full working. So we start with year 2020 because the grant we received in year 2020 to acquire that equipment. So how to record acquisition of equipment? Debit equipment, credit, regardless lah, bank, cash, or payable, or you haven't paid yet, payable of the equipment, 2 million. And how to record the grant? Debit, cash, or bank, regardless how you receive the grant, and credit deferred income, government grant. Okay, again, deferred income method, we record like the previous one, deferred income, government grant, 500,000. Okay, right. So this one is deferred income method. If write off against asset method, we need to minus with the equipment amount. But this one no need because we following a deferred income method. All right. So anything else happen in year 2020? No. Therefore, we just proceed to the end of the year. We are going to do amortization of the deferred income. So how do we do amortization? The deferred income, 500,000, we divide by 10 years. So we get 50,000 per year. So debit deferred income, 50,000, and credit amortization of deferred income, 50,000. Again, amortization of deferred income is our income or revenue. Okay, what else do we need to do? Don't forget, we have equipment. Therefore, we need to have a depreciation. So how much our depreciation? 2 million divided by 10 years. So we get to 200,000, 200,000. Debit depreciation, credit depreciation, 200,000, 200,000. All right. Okay. So what else? Next year, 2021. 2022 is the year for revocation, right? So 2021 we still have the asset. So we proceed the similar process. We repeat the similar process, which is deferred income and depreciation. We repeat the similar process. Deferred income and depreciation. All right. By right, what is the remaining balance? Because we have the revocation, right? So we need to know how much our balance of deferred income. Deferred income, you see, deferred income, we credit 500,000. Then we debit one time 50,000, decrease 50,000, decrease another one time 50,000. So by right, actually, our balance of deferred income is 50 less 50 less 50 equal to 400,000. So this is the remaining balance of our deferred income, 400,000. All right. Therefore, we know the remaining balance of our deferred income. Then we can proceed to do the revoke of 2022 when the company no longer able to comply with the condition attached. Therefore, how to do the revoke? For us to do the revoke, first thing first, we need to write off all of our deferred income. Remember, deferred income is liability. In order for you to write off liability, you put on debit side. So debit deferred income for 400,000. How much you need to pay? In full. In full, how much you receive? 500. So you are going to pay credit, bank, or payable 500,000. So the balancing figure is the loss, which is in this case is 100,000. Why 100,000? Because it's actually the 2 times of deferred income that you recognize as revenue. Here, 50,000 plus with 50,000 here, right? Revenue plus revenue, 100,000 revenue you recognize. Now to balance this, you need to put as expenses to become 100,000. Okay, all right. So next, we see what actually the question asks in the question. All right. So based on the situation above, the relative journal entry for the year end 31st December 2021, we done already, right? 31st December 2021. So by right, which one is the related to our answer? Debit depreciation 200,000, credit accumulated depreciation 200,000. This one, right? It's correct lah. This one correct lah, right? Debit depreciation 150. This one wrong lah. Not 150. Okay. Debit statement of profit or loss, deferred income 50,000. Okay. Credit government grant. It's not government grant. It's amortization of deferred income, not government grant, right? Debit government grant. Wrong lah. It's not government grant, right? So the answer will be A. Okay. Next question. What is the carrying amount of the equipment as at 31st December 2020? Carrying amount. To get a carrying amount is actually cost less with accumulated depreciation. So cost less with accumulated depreciation. Cost is 2 million. Accumulated depreciation is 200,000 depreciation for year 1. And year 2, 2021, second year, right? So we times with 2 years. So we get 200 times 2 is 400,000. So 2 million less 400,000. Then we get answer is 1.6 million or 1,600,000. All right. So the next one, the third one, in the absence of grant, the accumulated of depreciation on 1st of January 2022 is, okay, the question asks you here. What if there is no grant? What if in the absence of grant, the accumulated depreciation of the equipment on 1st January 2022 is how much? All right. By right, guys, this one is deferred income method. Deferred income method, there is no difference actually. No difference in accumulated depreciation. Even if you have grant or you don't have grant, don't have any different. Why? Or the one that only different is only a write-off against asset method. Because write-off against asset method, the cost of your asset are going to decrease by the amount of the grant, right? Under deferred income method, costs are not going to be decreased. Therefore, here the accumulated depreciation is similar, 400,000. No different actually, 400,000. Okay, that's it, be 400,000. All right, and the last question here. Okay, really relevant journal entry to record the repayable on 1st of January 2022. We do this one already, right? The revoke, right? So which one is the answer? Actually, okay, A, debit equipment. 500,000 relevant journal entry to record the revoke debit equipment 500,000. uh do we need to debit equipment? No, right? No. Debit loss arising from grant 100,000. Correct. Credit grant repayable 500,000. Correct. Accumulated depreciation 100,000. No. Okay, no. Right. So B, equipment 500,000. No, wrong. Accumulated depreciation 100,000. Wrong. Credit grant repayable 500,000. Correct. Gain on rising of grant payable. Wrong lah. No, not gain lah. Okay, not gain. Debit loss arising from grant repayable 500,000. Wrong. Loss only 100,000. Grant repayable by 500,000. Correct. Okay. Debit loss arising from grant payable 500,000. Wrong. All wrong. How? Credit accumulated depreciation 500,000. Wrong also. So which one is the correct one? The correct one is no. The question error. So no answer for the question. Just to show you, I no answer for the question. Okay, never mind. Okay. So we proceed. One more question. One more set of question. We proceed. The last one. Okay. So July 2022. Okay. On 1st of January 2019, Dynamic Berhad received a government grant of 25% of the cost of the asset from Ministry of Agriculture relating to acquisition of machinery costing 12 million. All right. The machine you want to purchase is 12 million. You receive 25% as grant. Right. The useful life of the machine are going to be 10 years. Residual value are going to be 100,000. Okay, so 100,000. They have a residual value, meaning that when you want to calculate a depreciation, don't forget to minus with residual value. To partly finance the acquisition, the company issue ordinary share at the price of 1.8 ringgit. This one we don't really have to take into really serious part on this part, but never mind, we just proceed first. Okay, the company adopt a deferred income method. Deferred income method again. So on 1st of January 2021, the company failed to comply with the condition attached to the grant by the Ministry of Agriculture. So unable to fulfill. Okay, so now 2019 first we do. So how to record in 2019? The machine is 12 million. Debit machine, credit, cash, bank, or payable, regardless how we pay the machine. 12 million. Okay. Covered by grant, 25% deferred income method, right? So debit, cash, or bank, credit, deferred income method by grant, 3 million. How to get this 3 million? 25% times with 12 million. So you get 3 million. Okay. How about the remaining balance? The remaining balance, 75%, which is 9 million. You use ordinary share capital. How do I know you use ordinary share capital? Here the question mentioned ordinary share to cover the partly to cover the finance, right? So we assume the remaining is 9 million covered by ordinary share capital. All right. Okay. So anything else happened in 2019? Nothing. So we just proceed to the end of the year. End of the year, what happened? We need to do a deferred income amortization. So we defer amortization of deferred income. How do we do? 3 million. Why is 3 million? Because 3 million is our government grant. 3 million divided by 10 years. Why 10 years? Because estimated useful life is 10 years. So we get 300,000 per year. Next, what else? Don't forget, we have a machine, PPE. So we need to do a depreciation. So how to do depreciation? Remember, to minus with the residual value 100,000 here, then divide by 10 years. So per year, depreciation is 1,190,000. Okay, 1,190,000. Okay. All right. So what else happened here? Okay, what else happened here? Okay. On 31st of December 2020, again, deferred income 200,000, 300,000, and amortization of deferred income is 300,000. Okay. And depreciation again, we do this one is continue from the previous one line. Okay, because not enough space for me to do the answer from the previous line. Okay. So again, similar method, we just repeat the similar method, the deferred income and depreciation. Okay. So because next year is the revocation, 2021 is the revoke. So I just want to know how much actually the remaining balance of our deferred income. By right, deferred income we just minus two times only, 2019 and 2020. So we have deferred income by 2.4 million here. Okay. Therefore, how to do this? The revoke in 2022, 2021, again similar lah. All right. We write off the deferred income, 2.4 million here. We write off. We need to pay in full. We need to pay 3 million that we receive. Okay. The balancing figure is the loss, 600,000. Again, what we did here is similar for three times, right? Three times we done a similar things. I do hope that you understand this process, right? Okay. So we see the question, what the question asks us, which one of the following statement is correct? Okay, is correct. Okay. On 1st of January 2019. So on 1st January 2019, we did this, right? We purchased a machine using a government deferred income, right? So Dynamic Berhad should credit only share capital by 12 million. Is it 12 million? No, only 9 million, right? Dynamic Berhad should credit deferred income and amortize the grant received to statement of profit or loss over the useful life of the machine. Is it? Is it? Yes, this one correct, right? So maybe that's it. This one. Never mind, we just proceed first. Dynamic Berhad should recognize the total government grant of 3 million as income. No, right? It's not as income, right? We recognize as deferred income. Deferred income is what? Liability, right? Not income yet, lah. But at the end of the year, then we recognize as income partially, according to amortization, right? Dynamic Berhad should include amount of grant received as part of the cost of machine, provided the depreciation based on 12 million. This one is not applicable, right? This one is actually include as part of the grant received. It's not grant. I mean the machine itself is 12 million. No need to include anything. That is the cost of the machine. No need to include the grant. If you say you want to include the grant, 12 million plus with 3 million, so it will become a 15 million, right? So no, that is not D, that is B for bola, right? So based on this scenario above, the relevant journal entry for the financial year end 31st December 2019. So at the end of the year, so we have this, okay. So the question asks you the journal entry at the end of the year. All right. So debit amortization of deferred income 300,000. Is it correct? Amortization of deferred income not debit. It's credit, right? So wrong. So debit depreciation 1,190,000. Correct. Accumulated depreciation 1,190,000. Correct. So the answer is actually B. Okay. Debit depreciation 1.2 million. This one wrong lah. The figure wrong. Debit the D1 debit amortization of deferred income 300,000. Again, amortization is credit side, not debit side. So this one is wrong. Okay. Next. Okay. Calculate the carrying amount of the deferred income. Calculate the carrying amount of deferred income, deferred government grant income as at 31st December 2020. All right. So again, we done this already. In 31st December 2020, we know already the remaining balance of deferred income is 2.4 million. So basically, the answer is B. All right. If part or all of grant become repayable to the government, then okay, if part or all grant become repayable to the government, then the carrying amount of the asset should be reduced. The carrying amount of the asset should be reduced. Is it? No, right? Because this is not a writing off against the asset, right? So carrying amount of the asset is still maintained. Deferred income only reduced, right? And an amount equal to repayment should be charged to the statement of profit or loss. No, we are not going to charge the full amount of equal to repayment. We just need to write off the deferred income first, and the loss is based on the different, right? Okay. The repayment should be applied first against the remaining unamortized balance of deferred income. This one is correct. So we need to write off first all of our deferred income. All right. And the repayment should be first shown as expenses. No, repayment, not all expenses. Part of it is covered by deferred income. The remaining is covered by expenses. All right. So that's all. Thank you.